Well, welcome to our video this morning. We really wanted to create this video for new personal representatives who are in charge of handling the affairs of an estate. We here at JCCS really believe in seeing beyond the numbers, and we hope that this video will help you feel more confident as you take on this challenging role. My name is Nicole Rieker. I'm a CPA and hold a master's in taxation from the University of Denver. I started in public practice in 2003, and estates and trusts are one of my specialty areas here at the firm. My colleague and I, Lana Kadashnikov, wanted to make this video to help prepare you for your first initial meeting with the CPA in starting out this process. So Lana, can you introduce yourself to us as well?
Absolutely. Good morning, everybody. My name is Lana Kadashnikov. I work at JCCS in our Great Falls location, and I've been working for the firm since 2006. As Nicole, I also work in trust and estates department, and this is absolutely my favorite area of tax. And you might say, why? It has such a complexity and such flexibility to it that it becomes so interesting to work with personal representatives such as yourself. For example, you as an individual file a regular calendar year tax return for most part. However, states can file a fiscal year return. So that adds another layer of complexity. One other area of estates that attracts me, it's the different number of hats that you as a personal representatives wear. For example, out of many people who can serve as a personal representative, the decedents have chosen you because they believed in your capacity, in your talents to see this process through properly and efficiently. And we, Nicole and I, JCCS and other team members, we would like to be the pillars for you to help you achieve your goal and to close the estate efficiently with a small amount of stress.
Absolutely. And it's all part of the process. So we thought here we'd really try to focus on what to be prepared for the initial meeting. This is a meeting that we're hoping to have with you to get to know you, to understand your situation, and to learn a little bit more about the estate that you are in charge of. Couple things that we'll walk through, detail some of the information that we'll need. But first thing that's going to be important to us is to understand who's on your team and the role that we can play to support you. So part of the team usually is an attorney. And so that's going to be helpful. In our local markets, we've worked with a lot of the attorneys around town and have good relationships with them. And so it's easy for us to jump in on your team and start helping right away. But that is going to be important. There may also be other professional team members that you have or may want to have, and we can certainly be a part of that or help facilitate any of those relationships within our realm. For example, you may have certain property within the estate that will need evaluation, real estate agent support, things like that, and we're happy to help you with any of the resources that we can that you may not have access to. But it's just important to know who we're working with to begin with. So that's one of the important things that you'll probably want to have spent some time thinking about as you approach the initial meeting. Another important area is just going to be understanding what kind of property is held by the estate and what the plan is to deal with that property, either to liquidate it into cash that can be distributed into the beneficiaries, or perhaps some of the property itself will be distributed to beneficiaries. Either way, it's just really important to understand what exactly it is that you're working with. One of the most common pieces of property that we deal with are an individual's principal residence. It's one thing that most people at some point in their lives own a home, and that can be one of the major assets that a personal representative will have to deal with. So that's one that's very common. We have also seen all kinds of more unusual properties as well,
Yes.
especially.
Mhm. Especially in the estates of the decedents, people are so unique. And some people love to collect automobiles. Some people love to collect china or furs or pianos or coin collections. And you, as a personal representatives, may encounter a unique situation. You may encounter a collection of coins, and maybe you are not well versed in that. And so, as a personal representative, you will need to look over the estate's inventory. It's the listing of what the state owns. And let's say that there is a coin collection in there. One of the duties of being a personal representative is to figure out what is the fair market value of those assets. And so you might say, well, I have this coin collection. How do I figure out what the value is? And so we have a list of various businesses in the area that do coin valuations, and we would be happy to share our contacts with you, and people can value those. And regardless what it is, we do have contacts in the industry that would help you through the process. So not to worry if there is something unique and you go, I just don't know how to deal with it. Share with us and we'll be happy to help you.
Yeah, absolutely. Um, I love that, Lana. We're all unique individuals, and so are what we're interested in. And sometimes that includes valuable collections of various types. So that's very important. So another thing that we're going to want to make sure that we're prepared to discuss in the initial meeting is who are the beneficiaries of the estate. So that's important data that the personal representative will be responsible for collecting. And it can be one of the more challenging things. So we really recommend getting started at the very beginning in collecting this data just so that it's gathered and that you've got that taken care of. I'm going to share my screen here and pull up a form that the IRS uses to collect all of the basic details that we will need for each beneficiary. So hold on a second, let's share screen. All right, there we go. So this form is called a W-9 form, and it has all the information that we're going to need for beneficiaries. Their full legal name, address, and social security number, or EIN number if applicable, like for example, for a trust. So this is really important, but it's a consistent way to gather this information from your beneficiaries and provides us with that consistent information. So this form is available at irs.gov. If you just go there and search for Form W-9, you can print one off and begin using it whenever you're ready. We certainly have copies as well that we would share with you at that initial meeting. But it is something that's going to be important for us to understand so that we can support you when it comes time to use that beneficiary data in any of the filings that we may have to do.
And you, as a personal representative, might ask us, what other documents do I need to be aware that I need to collect? Because it helps you pre-plan your actions and timing of those. And I would be happy to share with you a list of items that we will need to see, or your accountant will need to see, to help you administer the estate. And I'm gonna share screen. Give me just 1 second. So let's look at our list. The first item is tax statements, and I purposely put it as a first list because it's the most familiar items to you. You, as a personal representative, if we just take you as a person, you probably filed an individual income tax return, so you know how the forms W-2 look, how some of the interest and dividends form or mortgage statement might look. So these are the forms that we as an estate CPA will need. And those may include social security statements, your investment statements, settlement statement from the sale of the house, Some other tax statements that might be coming. Majority of those tax statements do have a stamp that says important tax information. A lot of entities do put that on. Some of those tax statements may not have that stamp on it. But so that's the most familiar item to you. The next one is just the contemplation that you'll need to do. We as accountants will need to know what is the mailing address you'd like to use on the final individual tax return and the estate's income tax return. And the reason for those is maybe all of the correspondence was coming to the house and you're planning to sell the decedent's home. So maybe we need to plan a little bit ahead and use either PR's personal home address or maybe PR's business address. The next item is the copy of the will, and copy of the will helps us accountants to see if maybe the will was allowing for some charitable deductions. So it helps us to see what deductions we can put down on the return. Also, it allows us to verify the personal representative nomination plus the list of beneficiaries. And in some of the cases, the will allows us to see if some beneficiaries have different rights than others, and that helps us channel the income properly to those beneficiaries. The next item on the list is death certificate. For some individual income tax returns filings, we're required to attach the death certificate with Form 1310, for example, so it becomes one of the necessary documents. We also would love to see the personal representative letter. It's a document from the attorney's office that lists your name as a personal representative, as the person who is handling the affairs of the estate. And also those letters, in some instances, we have to send to IRS. And as Nicole mentioned earlier, Form W-9 is a great way to collect information from beneficiaries. You as personal representatives may have a situation where beneficiaries are people who you know, and you may have information like mailing address and social security numbers. Sometimes you are dealing with beneficiaries who could be distant nieces and nephews, or could be people who you don't know personally. So that Form W-9 is a useful way. And the reason why we need all of this information is at the end of the estate, we will be sending some tax forms over to the beneficiaries. And that's why we need all of that information. And the last item on the list is the checkbook register for the decedent's bank account, checking account, and also the estate's checkbook register. Sometimes if you have an attorney who is helping you do accounting, then we would request that from the attorney's office to give us the accounting for the period. But that accounting is very important. Sometimes we ask for bank statements as well, because it helps us find all of the possible deductions that we can utilize on the estate tax return and final individual tax return. And it helps us be more efficient in our job and to claim the deductions, all of the deductions that we can. And all of those items, some of the items we may ask you to bring at the initial meeting, because you may not have some tax forms. So even though this is a list that shows all of the items, you may need to provide some of the items in the initial meeting and some of the items after the year has passed and you do have those tax documents. And I'm going to stop my share. And back to you, Nicole.
Absolutely. So that's a good point, that some items are going to be available initially, but many will just take time as the months unfold and as things are established and wrapped up, more information will be forthcoming. So the list is just something that we would go over at our first meeting and make sure we cover everything that's going to apply to the estate that you are the personal representative for. Customized. And as part of that process too, we'll need to determine whether or not an estate tax return will be filed. So that is a valuation-based return. It is not an income tax return. We'll cover that as well, but I just want to make that distinction here that one important consideration is whether or not your estate that you're handling is of the size that we need to be concerned about filing this and reporting estate information. The size that becomes taxable, where we would be looking at this, is right now it's about $11.5 million for each individual person. So for estates of that size, based on the value of all the assets within someone's estate, that's where we would be focusing on. If we're close to or above that valuation, then we open a whole nother book of work, and would need to be looking at that estate tax return. Most of the time, though, that's not the case. And if our assets are far below that, we won't be required to file any information for an estate tax return. We may consider doing a summarized version in order to elect portability. It's an important election for married couples to consider, but that's something that we could always go into more detail based on individual circumstances. But most of the time, the valuation of the assets, if it's below that $11.5 million threshold, will not require this filing. So that's important to understand the difference between the estate tax return based on the value of the assets and then the income tax returns, which is what we are generally looking at preparing for both the individual and for the estate income tax return. So Lana, can you tell us about what to think about for the final income tax return for the decedent?
Absolutely. And that's why Nicole and I really love our expertise in the state taxation arena, because there are circumstances under which the final individual income tax return may need not to be filed. And so, for example, let's say that the decedent had died in January. And so for that year that they died in, there is not much income generated in this year. And when you come in to see the accountant or CPA, that would be one of the areas that you will discuss with them. We'll take a look at their income level, and we may say, hey, this income does not rise to the level of required filing. And then at the same time, we'll also look at those income sources, and we may say, hey, even though the income level is not high, however, we can see that there was withholding taken out. And just for example, let's say that if the withholding was $20, a federal withholding, you as a personal representative may decide, you know what, it's not worth the filing. But let's say if the withholding was, say, $1,000, we may say we are not required to file, but we'd like to get the withholding back because this is an asset of the estate and that would benefit all of the beneficiaries. A lot of times, some personal representatives choose to file the final individual tax return just to fulfill their duties of personal representative, because they say, we want to inform the IRS that the decedent passed away and that there will not be a income tax return coming in 2 or 3 years later. So some people choose to file it even though they're not required to. So very interesting, very complex. There are a few areas that you need to consider. Nicole, what about an estate income tax return? Are there instances where you don't file one?
Absolutely. If you're dealing with a very small estate and you're not selling assets and there really isn't any income being generated, for example, interest on a bank account for the estate where some money is being held for a short term before it goes out to beneficiaries, there just may not be enough income to create a filing requirement.
Yeah.
The threshold is $600. That's what we're typically looking for, is if we expect income to be more than $600, then that's when we want to start looking at that estate income tax return. And it's really important to keep in mind that there are actually other benefits from filing the estate income tax return for capturing potential capital losses, excess expenses of the estate that can be ultimately passed along to the beneficiaries. And so it's really important for us to look at all the options available. And really, whenever you start to sell any property and have gross proceeds from any sales of more than that $600, you really have created the filing requirement and should go ahead and file, even if in the end there isn't going to be any taxable income coming through that income tax return. It's still really important. And one of the interesting things, I think Lana mentioned this earlier in our video, about estates and their filing requirements is that they do have the opportunity to file on a fiscal year end, which means that they can have a year end different from the calendar year that we as individual filers usually 99.9% of the time are working with. So I'm going to just share my screen here and share with you some information about these deadlines. So similar structure to the deadlines as an individual tax return, but it can be moving based on when a person happens to pass away. So if you were to die, like Lana said, on January 15th, your year end would be December 31st. So that's just like normal. But if you were to die on, July 5th, your year end would be June 30th. So your year end can be the end of the month previous to the month of death of the next year. I know it sounds confusing, but I put these examples up here so that you can see you basically get 11 months and some for your filing year for the first year of a date of death. What that means to us is that that's just the time frame that we'd be looking at for income and expenses within for our measurement period. But then we would still have some time to go ahead and prepare the tax return and file it. So if our December 31st year end was what we were working with, then just like individual tax returns, our due date would be April 15th. But we may need extra time. So we can request an extension for 5.5 months, which gives us till September 30th to ultimately file that tax return. And I've also included in these examples the 15th day of the 4th month for a couple, for both the date of death in July and September, just as an example of what these year ends can look like. But that's something that in our initial meeting, we would want to make sure that we discuss and make sure the personal representative is aware of the time frame that they're working within, so that as they continue on with their duties, they can have this understanding. So if there's ever any questions, we hope that that's one takeaway from our first meeting, gives you some information about the expectations of timeline.
Very good.
All right. Well, then we just thought we'd take a few minutes and go through some of our most frequently asked questions. I guess I began to allude to it, but Lana, can I ask you, how long can a personal representative expect this process to take?
Absolutely. Nicole, if we look at the instructions of the form for the income tax return for the estates, we can see that IRS expects on average the state administration to take 2 years. And after the 2 years, if it does take longer than that, then we as CPAs and accountants need to provide the reason why. And so, speaking from general experience, I have seen estates be closed in as a short period of time. The shortest one I've seen was 6 months. So the administration does take time. And contrary to belief of the beneficiary. Some beneficiaries think, okay, a week or 2 weeks is enough. It's absolute. The administration does take time. The legal paperwork does need to go and be processed. There are tax returns to be done, so all of it takes time. So on average, most of the estates do get closed within a year to 2 years. There are unlikely estates that have some contention between beneficiaries. It might take longer. I think the longest estate that I had personally done in office was 9 years long, and it was because beneficiaries were not agreeing to the terms of the will, and there were some legal battles. But generally within 2 years, if you can close the estate in 2 years, that would be fabulous.
Absolutely. It's a good number to keep in mind as you begin the process. And another area where I've seen them go longer is if there are assets that may be challenging to liquidate, but ultimately that's the plan. So perhaps real estate or something more complicated, business assets, things like that, where it can just take longer to make sure that the personal rep's doing the best that they can for their fiduciary duty and protecting those assets for the beneficiary.
Yeah. Nicole, when I meet with personal representatives, a lot of times they ask, what sort of documents do I need to keep, and what is the threshold? How many years or months do I keep the information? What is your answer to those questions?
Absolutely. And I say, let's be conservative and try to keep everything. It is a bit of an organizational challenge. And so we would recommend setting up some files, some binders, things like that, that can help you make sure that you're organized from the beginning. That's always a really good idea, because you're going to want to keep track of everything on Lana's list that she shared earlier, which is going to be bank statements, legal documents, things like that. But I'm going to also add in there detailed receipts, invoices, things that you're paying for on behalf of the estate. Those are all going to be very important to keep the actual documents, along with any correspondence that you might have along the way. So potentially emails from people like us, from the attorney, from the beneficiaries. It's going to be really important to keep those organized and available for you to refer back to if needed. It does not have to be physical copies. So if you're comfortable with digital copies, so a scan of a receipt or a picture saved digitally, that's fine. But it is important to keep that information so that it's available and accessible. And we would recommend using the same guidelines for retention that we would for a regular individual tax return. So that's going to be 7 years. So somehow we're going to want to grab that information, organize it, and then put it on the shelf for that 7-year period.
Mm-hmm. Absolutely.
Yeah. So as part of the process, I think we've come up with some great examples here during the video. But Lana, is there any other benefits that we bring in the planning process?
Absolutely, Nicole. And that's the fun part for us, for Nicole and I, the pre-planning of what income could be received in which year and what bills could be paid in what period provides a platform to see if we could be a little bit more efficient with taxes. For example, you as a PR have the obligation to pay the bills, say for preparation of the tax return, or pay the attorney's fee. And let's say you have a fiscal year that ends in June 30th. Sometimes if you pay the legal fees and accounting fees in June versus July, just a month later, can have an impact. They could be deductible. They could have a deduction that saves tax in 1 year, but does not save tax in another year. And that's why it's super important to have a good team, to have a good attorney and good accountant on your team, because your beneficiaries could have a bigger benefit when you pre-plan some of the income that comes in or some of the deductions that you need to pay. And speaking about deductions, I did mention that there is a fee for tax return preparation services. And so a lot of our PRs that talk to us do ask the question, what can they expect to spend for preparation of final income tax return and the first and final estate income tax return? And I'm just going to share with you a little bit of a practical experience that I have. Each person, each decedent is unique. They have a unique set of circumstances. They have a unique collection of assets. We could have a decedent who owned 15 rental properties, or we could have a decedent who was an owner in 5 different businesses, or we could have a decedent who only owned a home and maybe an investment account. And because of the situation, the pricing will depend on complexity. But if you wanted to know general ballpark, then the final individual tax returns, the simple ones could start at $550 per return, and they could go a couple $1,000s, again, depending on complexity. For the estate tax return, on the lower scale, on the simpler estates, probably $800 to a couple $1,000s, again, based on complexity. But I'm sharing those numbers with you in hopes that you can see what is the potential outlay of funds for such services could be.
Absolutely. And I would just add too that we're here to support personal representatives along the way. And so that really depends on the personal representative's comfort in doing what they need to do to gather this information, to organize it, and to have it all set up for preparing the tax return. That's going to come naturally to some people, and other people are really going to want more support, and that's great. We're here to do and to play our role at whatever level makes sense for that particular personal representative, and the costs adjust accordingly.
Absolutely. Yes. And we would like to be the team that helps you fulfill the duties. And we want it to be less stressful for you. We'd like to have the appointment with you, the initial appointment, provide the framework of what needs to be done, what would be the filing requirements, what would be the timing, because being a PR sometimes is a burden. That's a very unique experience that you probably, if it's your first go around, you're learning a lot of things, and it's challenging. Not an average person does not know the things that you're learning in the process. So our job is to be your partner and try to alleviate any stress or anxiety. Where you have a plan, where you know the framework, when to file something, then it becomes easier for you and you can take each step at a time. And regardless if you choose our firm to help you or you have a trusted accountant, we just wanted you to know that it's good to have good partners, good CPA, good attorney on your side to help you through your journey.
Absolutely. So thank you, Lana, and thank you for watching our video today. We hope it was helpful to you, and we are a resource. Feel free to reach out to us with any questions along the way, because we're here to help. So thank you very much, and have a great day.
Thank you. Bye now.